Hello viewers, this is Dr. Alok Chajed welcoming you once again to Already Late, a channel that brings to you insights into the world of personal finance, investments and economy in the simplest manner. SEBI has taken a major decision which will have a big impact on your mutual fund investments. SEBI has directed all mutual funds to adhere to certain investment guidelines related to managing multi-cap funds. In this video, I will tell you what this change is, why has SEBI made this change, which funds are likely to get impacted, what steps might be expected from the fund managers of these impacted schemes, and finally, what should investors of these schemes, people like you, what should you do? Before looking at the new rule proposed by SEBI, we need to understand what is a multi-cap fund. A multi-cap fund is a fund which is investing in large cap, mid cap, and small cap. Now, what is large, mid, and small cap? Let me give you a quick update. Large cap refers to big companies, mid cap to mid-size companies, and small cap to small-size companies. Now, SEBI has made job easier and classified the top 100 companies in the market as large cap, the next 150 as mid cap, and all the others as small cap companies. In case you want more understanding of this, you can watch my video related to these explanations by clicking the link here. Let us now look at this new rule of SEBI. SEBI has mandated that all multi-cap funds should invest a minimum of 25% each in large, mid, and small cap companies. Now, before this rule has come in, fund managers of multi-cap funds had complete flexibility to invest entirely in large, mid, or small because there were no minimum investment guidelines given. The fund managers were completely free to choose among large, mid, and small sized companies. The next question is, why has SEBI done this? To answer this question, just have a look at this table. Now, the table that you see now gives you the list of largest schemes in the multi-cap category and the percentage of allocation made by these funds to large, mid, and small size companies. Now, do you observe that most of these schemes have a very high allocation towards large cap stocks? The exposure to mid cap is low and the exposure to small cap is almost negligent. Just a little bit of here and there. Now, looking at this data, is it fair to call these schemes as multi-cap schemes? How are these funds different from large cap funds of the same company? This is precisely what SEBI has observed, and this is what has prompted SEBI to make the change in this rule. Now, one could argue that this move has taken the flexibility away from the fund manager, and now the fund manager is being forced to invest in small and mid caps too. Yes, this is absolutely right. When SEBI launched multi-cap category, the objective was that the scheme under this category will invest in companies across market cap. By not putting in limits earlier, SEBI did give a room for this situation, the current situation to arise, and hence the need for this rule. In this case, I would say better late than never. Let us now look at what is likely to happen in the markets because of this change by SEBI. As you see now on the screen, the total money being managed under the multi-cap category is over 1.5 lakh crore rupees. Of this, 25%, that is 37,500 crores, has to be invested in mid and small cap too. Currently, the total exposure to mid caps is around 18%, and when it comes to small caps, the exposure is just over 7%. Now, as per the new rules, fund managers will have to sell large cap stocks worth over 37,500 crores and purchase mid cap stocks worth over 10,500 crores and small cap stocks worth over 27,000 crores. Please understand that this is a Herculean task because even fund managers have been skeptical about investing a lot of their money in small and mid-sized companies. Now, this is because of lack of confidence in these companies due to uncertain business scenarios over the last 12 to 18 months. COVID-19 has only worsened the situation further. Now, but with this rule, is it safe to draw an inference that Because fund managers are forced to sell large companies and buy small and mid-sized companies, price of large cap companies will fall and those of mid cap and small cap rise rapidly because there is an increased demand all of a sudden. Now, you may definitely see an immediate spike in a few companies in which fund houses have already invested in their other schemes. Now, this is because there is a high chance that the fund buys more shares of the same stock because it already finds that company valuable. But I would not advise you to invest in those companies solely with this reasoning. Why? Because I believe this is not the end of the road as far as this regulation is concerned. And any stock that you buy based on this news, what may happen? You may end up getting trapped in that stock because some other news flows and the stock moves in automatically opposite direction. First of all, as per the new rule, fund managers have time till January 31st, 2021 to adhere to these guidelines and bring the portfolio to the prescribed levels. That is still a pretty short time frame considering the massive load of buying and selling the fund managers have to do. Further, if you think mutual funds would adhere to this without further communication and consultation with SEBI, you are wrong. Mutual funds have already expressed their displeasure and given their views about the limitations of such a rule. It is quite possible that there are some modifications to this rule. First possibility is that SEBI revisits these limits and relax the small cap limit from 25 to maybe 15% or even lower than that, because this is the biggest problem area for the fund houses. Another distinct possibility is SEBI might introduce another category called flexi cap or dynamic cap or something like that to give fund managers the flexibility. If this happens, you may say most of these multi-cap funds categorizing themselves as flexi cap. Finally, SEBI may at the very least extend the time frame for implementation of this rule. Irrespective of what happens ahead, what should you do if you have invested in any of these funds? On an immediate basis, do not panic, don't take any action based on this news. Now let's look at this. Of the 20 largest multi-cap funds that you see on your screen now, the ones in red are the most affected. This includes the largest 5 fund houses. And I am sure you might have invested in at least one of these schemes because, yes, eventually they are performing well too. These companies will definitely want SEBI to rethink this rule. It is unlikely that there is a knee-jerk reaction and any major change in the portfolio on an immediate basis. If, and that's a big if, SEBI does not blink, there are two possibilities. Either the fund changes their portfolio and falls in line with SEBI rule, or the fund might change the fund category to large cap and merge with their existing large cap schemes. If either of these happens, you need to definitely revisit your investments. The times will be challenging for these schemes. The outperformance may not continue for long, and you may see muted returns for at least a couple of quarters. On the positive side, your overall exposure to mid and small caps will now be more certain. And because of this, you may want to reduce exposure to your other small cap schemes because of higher allocation into these schemes. In any case, I would recommend you to give 2 quarters post the last date, post the entire action gets over, to see how these new schemes get adjusted to the rules. You can, of course, continue to watch this space for more updates as and when there are fresh developments surrounding this news. Do let me know how you felt about this video. Do like and share your comments. Please share the video with your friends and contacts. And lastly, do not forget to subscribe to my channel. Thank you. Happy learning.